Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. Bitcoin have seen a fantastic past 24 hours, rallying back from that $100,000 support back to 105,000. The big question is, will this rally sustain until the new week, breaking above 106.7, which will facilitate a macro continuation upwards, or is this nothing more than an exhaustion rally? Will we see a correction back down? How will that play out and what will that mean? In today's video, we are covering everything from the short-term rally, the key levels, the next potential moves, the high time frame charts, the macro charts, and the total altcoin and cryptocurrency market cap. Before we get into it, make sure to smash that like button, hit that com button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you're interested in, you can also join us on Telegram. We post updates, charts, analysis, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contacting our admin, checking out a 50+ month trading track record, or watching a 10-minute video inside the channel showing you exactly how it works and what you'll get access to. Go ahead and check it out. We'd love to have you join up, and let's jump into the content. So as we can see, guys, Bitcoin has bounced very well from that $100,000 region. But unfortunately, with this rally, we are now approaching the first level of what I'd consider major historical resistance on the short term. We have got a level in which we have rejected from 2 prior times and now potentially for a third. With this rally toward the upside, we have seen again a fantastic amount of buying pressure. However, when we're looking at our metrics such as the CVD, the cumulative volume delta, such as the RSI, such as the market cipher, we can see we do have a large amount of exhaustion developing as the price has been pushing up into this level of supply. So the big question we're going to try and answer today is, will we break through here or will we see a rejection? Because for Bitcoin to continue aggressively upwards, for it to break through this weekly downtrend, this prior level of horizontal resistance at 106.7, which we all know to be the point of which we need to break above on the weekly to see a macro continuation into new highs, Bitcoin first will need to break through the current resistance we are challenging. So a very important level we will be discussing today. Let's start on our market data. 24-hour volume and liquidations. Of course, as you know, the weekend we do see a bit of a reduction in volume. This is down 47% at 133 billion. So actually pretty low over here for crypto. Looking at liquidations, this is down 55%. We are sitting at 90, well, just above 90 million over here. The majority of those liquidations still coming from short positions as Bitcoin has aggressively continued toward the upside. Moving over to our DXY and economic news, we can see here on the DXY has continued slightly toward the downside. Again, we have got some major economic news releases coming out this month, which will massively determine the direction of the DXY short-term movements. Our overall macro expectation is that we do see a continuation down to 92 to 93. Of course, if we see interest rates drop, this will be sped up. We will see this happen much sooner than 6 to 12 months. If we don't see interest rates drop, it could slow down a little bit. So the interest rate decision is really going to play a massive role in determining where the DXY goes. As we know already, guys, interest rates are one of the main drivers of macro price action when we look at risk asset price, as interest rates falling massively changes the entire environment, which facilitates more purchasing of assets and more accumulation of debt to purchase those assets, whether it be, again, companies debt to service ratios decreasing, facilitating increasing spending on debt, which they use that debt to acquire income producing assets, which they then use that income via those assets to then acquire more debt to then purchase more assets. So this big cycle, this big positive feedback loop to push the risk asset market up. And then you're looking at household cash flow. That is generally going to increase as short and long-term debt obligations decrease as a consequence of falling rates. We then see more expenditure in, of course, the risk asset market. So this entire process here is, of course, bullish. And for that to actually begin to play out, we need to see interest rates fall. So we know that falling interest rates on the macro has a good domino effect for rising asset prices. And this is why we don't even need to see the interest rates fall for the market to rally. All we need to see is the expectation that in a future period, interest rates will drop. And furthermore, we can go even a leg further. We need to see that if the interest rates have been rising, that they move to plateau. And when that happens, we see asset prices rise. And it's exactly what we were talking about all the way back on this channel, back in when we were talking about this back when Bitcoin was at 20,000, back in early 2023, and we began to see that process develop around about October 2023, and the market has aggressively continued upwards as a consequence of this mechanism. Even though we're up over here and the interest rate reduction discussion is still ongoing. So you can see how much the market really, tries to front run interest rate reductions in that sense. Let's move over to the S&P 500 and the news. So for news, we had our NFP data come out. We're looking at our CPI data. This is going to be in 3 days. We're looking at PPI in 4 days. And then we're looking at the big one, which is going to be the interest rate decision on the 19th. So 11 days time. We'll talk more about that as it comes closer. The S&P 500 has actually closed a fantastic weekly candle. This is a good sign. This is a really good sign for the S&P and the market. We have closed above that $6,000 level. So now that we are sitting above 6,000, this opens up the potential for that next leg up to start into those prior highs around 6,200, 6,150. And of course, this is going to be our macro top. If we break that macro top, we then expect continuations into new all-time highs. Overall, the macro bias for the S&P is bullish, provided we remain above 5,700. And of course, we're watching to see how this weekly candle opens. If we open up red and drop back down, we do run the risk of corrections. But if we do remain green and we stay above 6,000, the only logical expectation is that we move back into these prior highs. So overall, it is setting itself up for a potential good week. And we have to wait and see how that opens, particularly with that CPI information this week. If CPI comes out terribly bearish, we could see pullbacks occur. If it comes out very, very bullish, of course, so we know the probability for interest reductions begin to increase, and then we see the markets rally in anticipation of what may be a potentially bullish event. That is it, guys. Let's jump over to Bitcoin. Now, before we get into it, make sure to go ahead and sign up to BitGet, BitUnix, or BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll go to support me making this content, and of course, you'll support yourself trading on exchanges I trust and I use. We'll play a quick ad and we'll get right back into it. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get stuck in. We are starting on Bitcoin and then we will finish up on the total altcoin and total cryptocurrency market cap. So as we can see, guys, Bitcoin saw a very volatile week. Now, the month of June so far has been quite an interesting month. We had the breakdown of our horizontal consolidation, which led to a correction into that 200 moving average. We then saw a rally back up to retest that prior support as resistance, only then to see a dramatic correction back into these low levels of our prior consolidation at 101,000, and then we have seen quite an aggressive bounce from there. Now, this bounce, of course, has been quite volatile and has been very aggressive. And as we mentioned in our introduction, although we have seen the price action rise up quite aggressively here, we are seeing that with this rally, there is a lot of exhaustion occurring. And this exhaustion is represented by a few things. Number one, we are starting to see the price is showing signs of bearish divergences by, again, lower highs on the RSI and higher highs on the price action. This is generally an indication that the buyers are kind of running out of steam over here, or at least the selling pressure is beginning to pick up a bit. We can see as well on the CVD, the CVD has been falling, again, the cumulative volume delta, again, suggestive of potentially that those buyers are starting to run out of steam. And when we put those two things together and we apply it to the context of where we are, which is again a horizontal neckline of resistance, the potential for rejections here begin to stack up. Now, if we're looking at the price action from the volume perspective, we can see, guys, on the visible range volume profile, we do have a higher volume range in the middle over here on both sides of the spectrum, to the upper side to around 107,000 and to the lower side back to that $101,000 region. We have got volume gaps. So we've got these lower historical resistance ranges. These lower historical resistance ranges are more prone to volatile and aggressive reactions in price. Now, generally when we see the price retest a level of neckline resistance just above or below a VRPV gap, this is an even stronger indication that this level here is a point of resistance, but it is also acting as a trigger point. So at the moment, the short term, expecting rejections from this region potentially as low as the low point on the VRPV. If we break above the VRPV, should I say, we break above our neckline resistance into the VRPV range over here, this lower historical resistance range, we could see a violent move into that 4-hourly resistance and that weekly downtrend for the weekly candle close. So just to clarify that one more time to make it more clear, if we break through this triple top over here, this level of resistance we've now rejected from 3 times. If we are able to break that level and sustain above it, the expected move would be into that horizontal neckline of resistance at 106.7 and that weekly diagonal downtrend. Now, this point of confluence would line up with, if we look to the weekly chart, it lines up with this horizontal level of resistance we have drawn out at exactly around that 106.7 mark, which is the opening price of that green candle prior to the bearish engulfing candle. As we've discussed on this channel many times already, until this level breaks, the risk of corrections back down, the risk of the 62.09 breaking down is there. And as you know already, only upon the loss of the 62.09, only upon the weekly close below that range high, do we then enter a correction toward the downside, potentially into that $90,000 region, the mid to high $90,000 region. So until we do those things, until we break above this neckline of resistance, or we break below the range high, invalidating the bearish divergence in the 62.09, we are in no man's land. We are in decision, or should I say indecision zone. We are in a chop zone. We are waiting to see how that price is going to really react. We've seen initially already how volatile the price has been when we've dropped below that region, even running the risk of that 62.09 breaking down. If we actually close below, we should see a more aggressive correction. So yes, we have seen a fantastic rally. Yes, it is good to see. Of course, we are praying that the price is going to continue upwards. Of course, no one wants to see the market correct. Of course, it's going to be fantastic if we do get that next leg up for the 4-year cycle. And hopefully, if we do see this breakdown, it is not the macro top, But again, we are not out of the woods yet. For the market to initiate that next leg upwards, we need to get above these levels of resistance. And for us to even challenge this level of resistance, this short-term level of resistance we are now retesting after a weekend rally, which has been littered with exhaustion on the shorter time frame, we need to break through this level to even stand a chance at doing so. So, things to pay attention to, things to not ignore, and we need to watch to see how this develops, particularly moving into the new week. So let's now zoom out a little bit to the 4-hourly chart. Let's talk about, the best and worst case scenarios. If we look at our horizontal levels, they all remain the same, right? If we look at how the price has reacted over the last few days, it has reacted in a manner that hasn't really impacted the weekly as of yet. Now, the short-term price action, again, we're seeing rejections from the high over here, and we're seeing rebounds from the low. These are our horizontal necklines. Similar to what we have in the short term, a trigger down and a trigger up, these are going to be our bullish and bearish triggers. Like we mentioned, a break above here results in that lower historical resistance range entering, results in a continuation higher. Whereas a break below this equal low over here, now our retest, and the sell side liquidity results in a larger correction to 97,000, which validates the 62.09 breakdown in the RSI and validates the bearish divergence and range high deviation from developing on the weekly, as a weekly candle would likely close below, indicating this to be a local top. So there is still risk. We're not out of the woods, but the bounce has done a lot to save the weekly candle. And that's very important because, as we know already, and as we've shown you, 8 out of the 9 times we have seen weekly closes below the 62.09, okay, when we had the RSI breakdown and close below the 62.09 after being above the 62.09, 8 of the last 9 times since 2015, okay, 2015, which is 10 years, we have seen corrections of 10% or greater. That bit of confidence goes to, again, support the theory that if we get that close below, if we drop back below the sell side, we will see a violent correction toward the downside. So we need to be aware of that, okay? That plan of action is not yet in play, but we need to be aware of the potential for that move, okay? Just as we need to be aware of the impact it would have if Bitcoin is able to break through this region, absorbing all of this exhaustion, which would likely facilitate a strong continuation into new highs. That is it, guys. Let's jump quickly to the weekly chart. So again, a big question a lot of people are asking is, I guess, if we do see the worst case scenario, is it over? The simple answer is no, it is definitely not over. We have got a lot of confidence to suggest the macro uptrend is still intact, no matter what happens here on the short term. Now, ideally, Bitcoin doesn't go down, but if it does, which the charts are suggesting is very possible, okay? And again, like I said already, while we are sitting between that weekly range high and the weekly resistance over here, we are in kind of no man's land, so both are kind of possible. But if we do drop down, while we remain above the Gaussian channel upper band in the 50 EMA, we are in a macro uptrend. It is only when we lose these levels do we enter a macro downtrend. So that is something we have to be aware of. Now, when we do lose that levels, that is when I'll be turning macro bearish, when those levels are broken. Until then, I am still optimistic on the higher time frame, but again, I am cautious with what has been developing here on the weekly, with potential deviation setups, with bearish exhaustion, with the risk of the 62.09 breaking down, with again the exhaustion rally into the short term. These things do ring alarm bells in my head that I need to be very much aware of. Let's jump over now to the total cryptocurrency market cap and the 4-year cycle. Now, I do want to quickly touch on this, as we mentioned in the last video. I had a few people comment saying they're not too sure what I meant. So let's quickly go over it one more time. The 4-year cycle expected top is October 6, 2025. Now, if we look at the 4-year cycle for what it is now, and we measure date range trends between, again, the length of the bear markets, the length of the consolidations into the bull runs, and the length of the bull runs, we notice that each cycle thus far has been shrinking by around 2 months. Now, the 2-month difference has not come from the bull run phase, but it has come from the consolidation and the correction phase. We can see here 14 plus 16 equals 30, 16 plus 12 equals 28, and 12 plus 14 equals 26. So we've been seeing a negative 2-month reduction in the length of these cycles as we have been going on. And if we apply that to the length of a cycle, we've had 49 bars, 47 bars, 45 bars, would take us to August. So a potential earlier top than what the 4-year cycle would be suggestive of August. Again, while we remain above the Gaussian channel upper band and 50 EMA, there is always a chance we do see that play out, but maybe we see the 4-year cycle top sooner. Now, will the 4-year cycle top be the top? It's impossible to say until after the fact. Maybe we eradicate it, we break it. At some point, it is very likely it is going to break. It's not going to continue forever. But when we're using this point as an analytical tool over here, it is possible that the traditional top of the 4-year cycle people expect to be might be a little later than what this chart is suggesting. Something to keep in mind. Let's go over to the total cryptocurrency market cap. So again, like with Bitcoin, yes, we've seen a great rally, but no, we haven't seen enough to really confirm we're going to go higher just yet. The total cryptocurrency market cap is still in this weekly downtrend as represented by this downtrending diagonal trend line. We need to break through our level of resistance over here, which is simply going to be our prior. Let's just zoom in. Let me just take a second and zoom in. It is going to be the prior lower high. So this point right over here, we're sitting around 3.28. This orange level of resistance. Now, this orange level of resistance is our prior lower high, but of course it lines up with our weekly downtrend. So the point of confluence. If we break through here, I'm going to be very confident that the altcoin market and Bitcoin will rally, and it will likely result in Bitcoin breaking through this 106.7K region. Okay, awesome stuff. While we sit below that, where's my chart? Where we sit below this, we do run the risk of corrections back down to the 50, and we lose the 50, we expect corrections lower. So again, not out of the woods. There is a chance that we reverse over here and continue upwards, but we do need to see a little bit more confidence. We need to break through this weekly downtrend. If we're looking at the higher time frame charts on the weekly, we do have a RSI trend line. I would love to see flip. This is going to be the weekly RSI trend line. We can see drawn across from this bearish divergence. Of course, we had that weekly bearish divergence over here. We have seen the price correct to 50. We have seen a bounce. We want to see that RSI break above this trend line. If we do, that will initiate the next macro leg up of the entirety of the cryptocurrency market. If we don't get that, all we do is run the risk of creating a lower high. Moving over to altcoin market. Over here, guys, again, not too much happening. We are seeing some altcoins reach some pretty major levels of support, some yearly lows even. Now, when prices reach yearly lows for some altcoins, sure, take a stab. There's always a chance those are the lows and we're going to see reversals. So the risk return is definitely skewed toward the upside. When we're looking at the total cryptocurrency market cap over here for the altcoin market cap, if we drop back below this level is 826. We're really in deep water for a correction, and we need to get above again that prior lower high at around 857 billion to be confident in stronger market-wide altcoin reversals. Thanks for tuning in, guys. Have a fantastic rest of your day. We'll catch you in tomorrow's video. I look forward to seeing you all then. As always, bye.